Well, Bill, I'm going to turn it over to you. You were the moderator for our panel on Tuesday. I thought it went well. You want to start it off? Asking
Sure. So one of the things we were kind of obviously talking about a little bit of life for the participants pre-PPP, and then more importantly, the PPP story, particularly as it relates to fintechs and alternative lenders and their role. Because what folks in the 7A community may not realize, or they should, is that there was a major policy innovation that non-bank lenders and alternative lenders who are currently not SBA lenders were allowed to participate in the program, so Biz2 credit and so forth. And we were talking about the experience, and then also to some of the lessons learned and considerations for other non-bank lenders or fintech providers who want to kind of get into the SBA lending space. And we're also highlighting some of not just the direct or the lending that can be done, but also how the technology and platforms going forward, there's a tremendous amount of opportunity. And so it was great that we had Darren with us to really talk about his experience. Darren, I don't know if you want to give kind of a quick recap of Biz2 Credit's experience, with PPP and sort of where you are right now.
Yes, I mean, PPP was certainly a whirlwind. It was on some fronts, very challenging, but also very rewarding because I think we were able to rise to the occasion. In general, as a lending platform provider, we have all the components to really handle any secured loan, but obviously PPP was a very specialized program that we had to quickly develop a system that can handle it. And we knew, based on the first round that there would be some similarities with the second round, although we knew there would be some changes to it. So we did our best guess ahead of time to really launch, the platform, make sure it was ready. And it was certainly, a Herculean effort. We had, many long weekends, and, maybe it was your fault, Bill, but, regulation that was released on a Friday, on Monday, the developers are working all weekend with no sleep to make sure we would go live. So, overall, we ended up processing about $4.8 billion worth of loans directly. And then we also licensed our technology to over 50 banks and non-bank lenders who used it to process PPP. And I think, this time around versus the first round, it was very interesting because I think banks during the first round and non-bank lenders really didn't have time to even get a system in place, because if you think about it, they have a due diligence, they have a vendor process. There's no time, even if they wanted to, based on the timelines first time around. So a lot of our partners ended up just putting something together quickly with DocuSign or some other solution. But this time around, I think with all the nuances of it and how much resources they had to bring in from different sides of the org in terms of personnel to handle it, they knew this time around they absolutely needed a system to handle this. And the fact that the funds ran out so quickly the first time made it a perfect opportunity for a system provider to be able to support them.
Chris, you are one of the biggest lenders in the country. Tell us a little bit about the challenges and you utilizing a fintech, because you have a pretty defined process, I would assume, being one of the larger lenders.
Yeah, I mean, we don't have enough time to go over all the horror stories, of course. But yeah, I think it was very helpful. It was, as Darren said, it was this was a very interesting program. It was thrown together. Congress obviously wanted the funds to get out the door as quick as possible. Nobody in the lending community had ever experienced anything like this. So, there was always a sought after efficiencies, most of which would be technological efficiencies, but also, frankly, I know most lenders ended up staffing up either full-time or bringing on contractors to help as well. But it was quite an effort. I think it was, I would characterize it as really the economic development story of the last couple years. And, I'm glad it's putting a nice spotlight on SBA, because the folks at SBA, when Bill was there or even after, have just worked their tails off to try and keep up with all this. And it was a very collaborative effort across the board with the lending community and the agency. And I think we really did some great work. And I don't think we could have done it without some of the technological providers that we had, and just everybody's really hard commitment to try and help out as much as we could.
Makes sense. Bill, any thoughts?
Yeah, part of what it was so obvious, but, in a social distancing remote work environment, that, Chris mentioned the staff at SBA, they are still there, still cranking almost 2 years into this now. or a year and a half clearly, and they've done 2 administrations. That is not easy. But the technology from where I sat was so crucial to getting this done, whether it was white label services provided by folks like Biz2 Credit or other things, but then also too, going ahead, trying to ease some of the pain points in the 7A loan process going forward, post-PPP. I think we all agree that there's tremendous opportunity there, particularly with fintechs to play a role, either as sort of a support LSP mechanism and or as a direct lender, similar to what Chris is doing and what Chuck, you do as well sometimes.
Well, let me ask you, because if you look at what do we have? What do we say, 5,500 new PPP, new lenders as a result of PPP? And, we're signing up 2-3 a month at least. And so people are starting to become interested in the regular 7A.
Yes.
And the big difference is this was a borrower certification with PPP and a lender certification with regular 7A. And so we have now, I think it's been said 75 or 80% of the lenders dabble in this, and they do less than 7 loans a year. So it's a root canal for the borrower. It's frustrating for the loan officer. And so the 20% of the lenders that do 80% of the volume are the first ones to go towards a fintech solution. Darren, tell us where you guys are maybe and what your objective is in bringing on, say, new lenders to the industry. Is it going to be the big ones? Are they going to be small? What's the plan?
Yeah, I think it's really across the board. We're seeing interest in digitizing SBA programs from larger regional banks all the way down to smaller community banks. As you said, there's always been some SBA lending at some of these institutions, but I think now with the guaranteed portion and with the SBA name out there in the general public, it's so much stronger because of PPP. I think demand and awareness of SBA programs are so much higher. Plus, there's been an expansion in the program in general. So all in all, I think a lot of banks are starting to expand their SBA departments, and certainly technology is one way they can do it because, as everyone else on this panel understands, there's a lot of knowledge, in terms of SBA loans and specialization that's needed. And I think technology, what it can really accomplish is helping really pre-qualify some of the applications, help do certain tasks that are just really time consuming, and that starts all the way from the application itself. If you think about it, most banks today, if you go to their page, their website, it's really, if they have something, it's a form page and it's, hey, an RM will contact you and fill this out. And so you're already starting down a path of a very slow manual process where someone's going to have to email the borrower, give them the information, fill it out, whether it's PDF or something, and then gather all the documentation. And so there's a lot of back and forth and a lot of lost time in that process. And really what a platform can really help the borrower and the bank with is quickly, balancing, the right amount of friction, but gathering as much information as possible up front, helping to pre-qualify the borrower to be able to even be eligible for an SBA program, and help fill out the forms, the 1919 digitally, e-sign and package up all the information. So that way when the underwriter does see all the information on the other side, it's in pretty good shape at this point. They may have some questions to the borrower, but you're not starting from zero and it's not through email. So you can really help expedite this application a lot faster. And that's a huge pain point, I think, in lending in general and specifically for SBA, where there are a lot of nuances and everyone is so careful on what they want to submit.
That makes sense. The question, we're all getting older, or the industry's getting older and aging. There's a shortage of closers, underwriters, successful SBA managers. How, and Chris, maybe in your shop, you have a big shop, utilizing technology, has that just made you more efficient, or were you able to reduce some internal resources?
Well, we've used it to increase, to scale up, and I think oftentimes people think about technology as a replacement for people, but I think we really need to think about it as helping those people be more efficient and do their job better, and really bring the best value out of them. So I think I agree with Darren that there's always been friction points throughout the SBA process, and there probably always will, but if we can use technology to smooth out some of the rough edges, whether it's to read some of the documentations automatically with code or to auto-populate the typical forms, which are usually there from one loan product to another. It doesn't matter the uniqueness of the deal. Things like that will help speed up the process. And then I think, if you're committed to this space, you can scale up your people, because you're always going to need people to dive in and sort of handhold and figure things out and apply the knowledge base that they have to the transaction at hand. So that's what we're doing. And the other thing is, it's funny, I was on a panel a couple weeks ago at the Flagel conference, and it was about this very topic, which is how do we get new blood into the SBA industry? And there's a whole different host of suggestions out there, but one of the things that's been really well for me for 20 some years is it's been having a very strong internship program where I really view it more as an apprenticeship to bring new people into the industry so they can learn and hopefully grow with us as we grow over time.
That's a great way. We did that. My wife was a career director for a local college, and she fed 8 or 10 interns now that are in the industry. So I think that's an excellent way to kind of build a team. Bill, tell us, you're also a consultant with a number of banks. Tell us a little bit about that, or how you're helping organizations, and is it in the fintech space, or is it lots of different things?
It's a lot of different spaces. One of the great opportunities I had with PPP is the world kind of came to my desk, and not just the traditional 7A lending community, but people who are really interested in what's happening, and then also how to approach it, and then what makes sense going forward. And, I often say, and as you, Chuck, and Chris, and everybody knows, that PPP was 7A, but it really wasn't. And is a different game. I'm also really having the opportunity to talk about the importance of small business in this country. I think some of the policies need to be changed, that the nature of small business is changing a little bit, and that there are some things that we can do to really encourage and make the country that much more competitive going forward. So working with institutions, and then also trying to raise my voice for the small businesses out there struggling. I'm a small business myself now, and so it is always interesting to walk the walk as much as you've been talking the talk, as you both know as well. And so it's just been really exciting. And, the other great thing I get to do now too is I actually get to go out and talk to lenders one-on-one and hear their PPP story. And oh my gosh, do I learn so much, and things I had never considered. And also too, now their challenges too, they're trying to deploy capital. A lot of banks, traditional lenders, are trying to deploy these capitals and these deposits they have now because of PPP. So it's kind of just all this great opportunity to really go out and meet and hear from the industry, and then also advocate publicly for what can be done for small business. There was a tremendous coming together of the lending industry and everybody really across the country who said, okay, this is our chance to help small business and to prevent mass unemployment. And there's a lot of bipartisan goodwill for small business, which is kind of rare these days. And so I'm trying to advocate for that space very well, as best I can.
You're one of the minorities, but one of the good guys, right?
Yeah, one point I wanted to make is, accessibility is so important, with these programs. We did a study recently that since 2019, 57% of loan applications happen outside of normal banking hours. So I think what's really interesting is, the small business owner wearing a lot of hats, very busy. They may not have time to walk into a branch to go and apply for an SBA loan, but if you can use technology to improve the accessibility, that helps things tremendously. They can apply off hours, and we found that, out of that 57%, that's a 19% increase since the start of the pandemic. So people are certainly more comfortable to apply online now, and there's a lot more banks that have these solutions in place and a lot more that need it. But it certainly speaks to, how you can increase your program in general just by having that accessibility.
That's a good point. Let's talk about the small loan program for a second, because if I'm correct, 60% of the units that are done every year of the $25 to $30 billion are less than 350, and it represents maybe 20% of the volume, I think. And so now that we have no fees for loans of less than 350, that's a space that we collectively should be running towards, in my opinion. What do you guys think?
I agree. I think it's a huge opportunity. There's not that many lenders that are approved for Express, but I think you'll probably see that increase throughout the year. And actually, to echo Darren's point, we've recently noticed that our PPP borrowers, we're providing them access to capital post PPP, and the response rates that we get on the weekends, believe it or not, are the top of any other day throughout the week. So I think it's meeting people where they're at. A lot of the self-employed folks, chances are if they're a gig worker, they might have 1 or 2 jobs, or they may have a full-time job during the week and do some sort of a gig side hustle on the weekend. So I think it's really interesting to see that. It's just the evolution of financial services, specifically in the SBA industry.
I think you're right. We had one lender in New York that did UCC searches with all his borrowers and found that a lot of them used on-deck capital, at the rates that they charge. So, Darren, you're right. Small businesses aren't going to the banks anymore. They're going to the quick solution. And so we as an industry need to mold and shape our way into that, I think.
Yeah, and the Federal Reserve, they do a study of small business lending. The Federal Reserve has a division that does that, and they confirm that that they really are going online. They're much more comfortable and similar statistic to what Darren has talked about. So the technology's here, and we have to think about how we harness that and make the 7A program and small business lending in general more effective and accessible for more people. Our mission is still continuing, whether I'm in SBA or not. It's to help small businesses grow and access capital responsibly.
The other thing I'll mention is I think it helps democratize the process. If you think about PPP, a lot of big banks got some bad press for favoring their major clients right until the funds ran out, but the small business who actually needed it the most, they kind of got the cold shoulder. So I think when you have a platform also, it's a little bit more impartial. You're opening it up to anyone who applies, and as long as the bank, sort of follows a first come, first serve process, then, the smallest businesses who, need it and apply quickly can get served. So I think that's something also that technology can help with.
Chris, what was the smallest PPP loan you did?
I think we did a $650 loan, which is
we did one to a barber in South Carolina, so that was impactful, I guess. Yeah.
There were $1 PPP loans, but I think people were just testing the system.
I think that's right. Let's hope.
Could be. Well, we're getting close to time. Are there some final comments you guys want to make on fintech space and the SBA industry?
Yeah, I'll just say something very quickly that, as Darren noted and had been noted earlier, when I was at SBA in 2017 and 18, we were trying to make SBA more well-known. We have solved that problem now, or the pandemic has solved that problem.
Yes.
And so now it's how do we leverage technology and really help the smallest of small, but more different types of small businesses grow. And I'm convinced that technology provided by fintech providers like Biz2Cred and other have to be part of this equation going forward.
Yes.
And as well as bringing in the new blood that, Chuck, you've talked about, and Chris, kind of your leadership as well in this area.
I think it's important that we all can appreciate, sometimes if we step back, the Googles and the Apples of today were once a small business not too long ago. And that's why I think all of us on this panel are passionate about this and trying to help these folks, but also not overlook the people that really needed the PPP funds the most and actually have the biggest need for access to capital going forward. So it's always exciting to talk to people that share my views on these things and trying to do some good in our industry. So I just think that better, exciting times are ahead of us. I just hope they're not as difficult as they were during PPP.
Darren, you're exciting. You have a good seat there in the table. So some final comments, maybe.
I would urge lenders to not wait too long. I think, traditionally banks don't move so fast, right? Everyone knows that. They have a lot of legacy, policies in place. But the actual industry is moving so much faster now. You can see it in the fintech space, how traditional services have been picked off one by one, and a fintech can really specialize in one area. And I think banks are being disrupted faster than they would like. And so my advice would be not to wait too long. I think once there are certain lenders that have a great process online for SBA loans, there's no question that other borrowers will apply with them, and not to just rest on your brand reputation only and say, hey, no one's going to touch me because I own, this geography. I think everything in terms of tech and fintech especially has been unleashed right now, and the pace of change is so much faster than it has been. And for banks not to wait too long to really update their systems and get some of the benefits that we've talked about today on the panel.
We've lived with, growing up with the banks, and the due diligence and vendor management policies have changed drastically over the last 5 or 10 years. I would assume that PPP, there were probably some shortcuts in that so that they could implement the program. But now that we're getting out of that, it's still going to take a while to implement a fintech solution in regular 7A lending. Is that a fair assumption, or not? As it relates to internal bank policies, due diligence, those kinds of things, Darren? Do you feel that's accurate?
Yeah, it depends. It depends on the bank. Every bank is a little bit different, but I would say in general, if you can deploy a platform quickly, and we just actually launched a version that we can deploy in 30 days. And one of the key things is how does it interact with their existing systems? And that's, usually where things get hung up the most is if you are integrating your system into the bank's existing core, you're touching potentially some other sensitive sides of the bank, and that's where you can get hung up. And so, one area that, we can still deploy a solution would be to simply just pass the data with a little bit different of a process, maybe nightly at a certain time instead of having a live integration. And just little things like that can help a bank, if they're willing to do it, deploy the platform a lot faster in the market and really get the benefit. But that's typically an area where we find from a vendor side we can get hung up.
And unlike PPP, we're going to have to start crossing our T's and dotting our I's like we normally did during the 7A world, right? So it's a challenge for all of us, but I think it's something that we're eager to get involved with. Bill, Chris, anything else before we get off?
I'm good.
All right. Joseph, thank you for having us today, and I thank you for allowing us to be on the Coleman Live show. Bob, my best to you. And we'll see you folks tomorrow.